In this video, we review Gerber Life Insurance Review. Have you used Gerber Life Insurance Review before? What was your experience? Leave your Gerber Life Insurance review in the comments section below. The Gerber Life Insurance Grow Up Plan is a whole life insurance policy targeted at children, often promoted as a dual-purpose plan for long-term life insurance protection and as a way to build a cash fund. Although popular among new parents and grandparents, reviews of the plan reveal both advantages and drawbacks, making it essential to understand its structure before committing. One appealing aspect of the Gerber Grow Up Plan is its affordability. Since premiums are based on the age of the child when the policy is purchased, the monthly cost remains relatively low and never increases. This locked-in rate can be an advantage for young families who may want life insurance coverage for their children without the burden of rising premiums. Another notable feature is the automatic doubling of the death benefit when the child reaches age 18, which can make the plan more attractive for parents looking for future coverage stability. Additionally, the cash value of the policy grows over time and can be accessed or borrowed against if needed, although this cash accumulation is slow compared to investment-focused savings vehicles. This could be helpful in cases where emergency funds are required, or if the child wants to use the cash value later in life. However, one of the primary disadvantages is that the plan's cash value grows at a lower rate than other savings options. For families aiming to save for a child's future, such as college expenses, alternatives like a 529 college savings plan or a custodial investment account generally offer better returns. A 529 plan, for example, allows funds to grow tax-free and can cover qualified educational expenses, whereas the Gerber Grow Up Plan accumulates cash at a conservative rate, with no tax advantages for education. The cash value in the Grow Up Plan can be accessed by the child once they take over the policy, but its growth potential does not match the level of returns typically associated with stock market-based options. Another point of contention among reviewers is the necessity of child life insurance itself. Generally, life insurance aims to replace lost income for dependents, and children typically do not contribute financially to household income. Therefore, some critics argue that the plan is more of a nice-to-have rather than a necessity. While the Grow Up Plan may offer a financial safety net to cover funeral or medical expenses in the event of a tragedy, many families could achieve similar coverage by adding a child rider to a parent's existing life insurance policy. These riders tend to be more affordable and often sufficient for covering unexpected costs without requiring a separate policy. Additionally, the Grow Up Plan's maximum death benefit of $100,000 is modest, particularly as the child grows older and potentially requires more substantial coverage. If greater protection is needed, supplemental policies may become necessary, reducing the advantage of lifelong coverage provided by the plan. Despite the negatives, some families find comfort in knowing their child has a foundation of lifelong insurance coverage that may continue if medical issues arise in adulthood, potentially affecting their eligibility for new policies. In summary, the Gerber Life Grow Up Plan can be a useful tool for parents or grandparents seeking modest life insurance coverage for children, with the added benefit of a cash value component. However, for families prioritizing long-term savings growth for education or future expenses, other investment tools may offer better financial outcomes. It's ideal for families to weigh these factors carefully, comparing options and clarifying long-term goals before deciding on this or any similar policy.